Welcome to drillingcontractor.org. I'm Alex Endres, and I'm at the 2016 IADC Annual General Meeting in Scottsdale, and joining me here is Byron Pope. He's Managing Director of Oil Service Research at Tudor Pickering Holt. Byron, thanks for joining us today.
My pleasure.
And today you gave a market outlook presentation, and you said that oil prices could reach as high as $70 per barrel in 2017. Can you tell us about some of the potential signs of recovery that lead you to that prediction?
Well, fundamentally, what we're seeing is that U.S. oil production is already starting to trend lower. And so we think in this year we'll see U.S. oil production down roughly 600,000 barrels per day. And we think in 2017 it's going to be tough for U.S. E&P operators to grow oil production without increasing capex. And on the international side, outside of OPEC, we're seeing signs just with the dramatically reduced rig count activity in many of these international markets that we would expect to see international companies be challenged to grow their production as well. So fundamentally, the supply side of the equation is starting to fix itself. And outside of OPEC, which is always a wild card, we think that we're setting the stage for higher oil prices in order to incent E&P companies to bring more production online in coming years.
And so how do you see operator capex changing over the coming year?
So we think in North America, E&P companies are likely to increase their capex order of magnitude 30 to 40% increase in 2017 versus 2016, with that order of magnitude both in the U.S. and in Canada. And we think that a lot of that incremental capital will go to the completion side. But again, in terms of capex dollars, we would expect them to be up nicely 30, 40% on a year-over-year basis.
And as far as rigs go, how do you see the land rig market faring in 2017 versus the offshore rig market?
So we think U.S. land rig count actually has a shot at being up 50% year over year. Now, that said, we're starting from a very low base with under 500 rigs working for most of this year. But on a percentage basis, we would expect the U.S. rig count to be up nicely year over year, averaging roughly 650 rigs in 2017 versus where we sit today. So we expect to see a fairly robust recovery in land rig count activity in the U.S. Will take longer for the offshore rig market to heal, but expecting a really solid improvement in North America rig count activity next year.
So Byron, how do you see demand changing over 2017 and affecting oil prices?
Well, I think what we saw and have seen in 2016 was gasoline demand in the U.S. was particularly strong, and that's a function of the low oil prices that we've seen. So we wouldn't expect 2017 demand on a year-over-year basis, percentage change basis, to be as robust as it has been in 2016, but we still expect global oil demand to be fairly resilient. It typically grows 1% a year outside of a major economic recession. So again, in 2017, we would expect to be another solid year of demand growth, both in North America and internationally.
Well, Byron, thanks for making the time for us today.
My pleasure. Pleasure joining you.
And thank you, viewers, for joining us today at drillingcontractor.org.